Let's take a look at some charts on Monero from this week's article on Brave New Coin. So Monero is definitely an interesting one in that it has an extremely strong use case that includes malware, cryptojacking, browser hijacking, all sorts of devious cybersecurity related stuff. Because if you're reading the article and you're wondering, why is this guy droning on and on about all this cybersecurity nonsense? It's because that stuff is helping to fuel what I'm seeing on chain as far as hash rate, difficulty, transactions per day, that sort of thing. It's not to say Monero is only used for illegal or nefarious activities, but its primary objective, privacy, is so ironclad that the criminal underworld, let's say, let's use some more negative words for Monero, they love it. So they're using it, right? Like if you're a criminal and you know you can't get caught trying to steal money, trying to ransom some server, some telecom in Venezuela or wherever, could be in the US, could be in the UK. We've seen it all over the world. You're going to use Monero. It's irreversible and private. No one knows where it's going, right? You can't track it, which is why the total daily transaction volumes are not reported here. The daily active address is not reported here. You get some idea of what's going on with the chain because of the fees. Fees on Monero have always been a little higher than the rest of the quote-unquote privacy coins because the block sizes are typically slightly larger, and you can't really know for sure how many active addresses are going on here. You can see that there's less transactions per day than Dash, but significantly more transactions per day than Zcash and Grin. And the Zcash people will tell you, well, this doesn't report the shielded addresses. Then I will retort with, shielded addresses account for less than 10% of the chain that I can see. So unless you have some better data, show it to me. So there's all sorts of caveats with this. These aren't all quote unquote true privacy coins. They're not default privacy coins. Only Monero and Grin does that. All these others are optional privacy coins and lauded by chain analysts as great things to buy. So not exactly something that the underworld is going to use reliably if they don't want to get caught, right? I'm not going to use Zcash over Monero when I know I can't get caught using Monero. That just exemplifies the privacy use case. I'm not saying it's good or bad. I'm just saying that's the way it is. So fees are obviously high for Monero. I don't think this is a scalability issue as much as it is just a lot of on-chain use. I'll show that in a minute, but Monero kind of leads the rest of the pack as far as GitHub commits, daily fees, market cap, pretty up there in transactions per day, considering Dash does on-chain mixing essentially, and so does Monero really, like ring signatures and that sort of thing, in my view, are just on-chain mixing. So this whole metric for all these coins is kind of useless. It's not like a pure one-to-one measure of one transaction being sent to one place. It's kind of like one transaction gets sent to a bunch of different places and then it gets sent to one place. And this is total GitHub commits for each coin. For some of these, this includes the website, including Monero, which is why these GitHub commits are probably so high compared to everything else. But the activity on GitHub for Monero is quite high just in general. Now, if we look at hash rate and difficulty, lots of interesting things to talk about, specifically the change in algorithm completely from Crypto Night to Random X late last year. So hash rate after November 2019 is actually completely different than pre-2019, pre-November 2019. So you can't really compare the two. Now the reason these hash rates go up and down so dramatically is because they have a lot of ASICs and botnets just constantly mining the chain, right? Because again, it's private, it's untraceable. You can put these crypto miners on servers silently and it just sucks power and whatever else from them like a parasite. So each time what they tried to do is adjust Crypto Night slightly so that it sort of bricks all those botnets, all those secret ASICs, whatever's going on. And then they finally just decided, we're just going to change the algorithm completely to make it virtually impossible for ASICs to take the chain over. So right now, CPUs are actually more advantageous than ASICs. So to me, I think this sort of secondary issue that arises is botnets are probably more profitable now than they ever were, because I could be wrong, because if CPUs are more advantageous over ASICs, then you're going to try to strike as many servers as you can with this worm to try to mine Monero. And this was some of that most likely. Some sort of cloud mining. This spike is insane, right? It's like 2xing the hash rate in a day. So definitely some weirdness going on here in the mining front that is likely related to cloud mining, server mining, ransomware, botnets, that sort of thing. If you look at the hash rate, it's actually become more distributed over the past month compared to the prior 3. So this actually looks a lot better. 2 pools control 55%, but it was much worse than that. So this is starting to look better and better. That's what you want to see for decentralization, especially post consensus algorithm shift, because to me, that's the most vulnerable time. And you can read up on RandomX, and there's probably plenty of reasons why it actually would be more difficult to 51% attack RandomX versus SHA-256 or whatever. But it's still a concern if there's a concentration of hash rate. If we compare BTC to XMR from a supply and inflation perspective, supplies are pretty close. XMR at 17.5, BTC at 18.19, somewhere in there. And the inflations are pretty close. BTC below 2 or about 2, and then Monero somewhere around 2.2, 2.1, something like that. You can see that Monero doesn't have halvings, it just has constant disinflationary curve. So together, BTC and Monero have some of the lowest inflations of any coins. If you look at the transactions per day and mining difficulty, what I'm assuming is that the transactions per day are mostly botnet related, or some price speculation related, sure. Like since late last year, we saw hash rate go way up, transactions are following, transactions basically at an all-time high here, mining difficulty at an all-time high since November 2019, and the spikes in mining difficulty have sort of preceded spikes in transactions per day, so there might be a massive spike in transactions per day soon if hash rate keeps increasing. If we compare the fees to from all the privacy coins, you can see Monero in the red here. It's kind of the leader. Pivx is likely just having scaling issues because it has virtually no on-chain activity, yet its fees are more expensive than everything. So they've got some work to do there. But Zcash is right below that, Decred, Grin, Dash. And if we look at the block sizes, Monero has the biggest block size compared to all the other coins. So it makes sense that it would have just more fees. If we look at Google Trends for Monero, they've been basically flat. Over the past 2 years, nothing too exciting. Nothing big. And if we zoom in on the past 2 years, it's just been kind of flat. If we look at price, we have the Bitfinex long-short ratio, yearly pivots, 5,200 EMAs, RSI, and volume profile of the visible range. So the Golden Cross happened a few months ago, and since then it's just been the expected bullish continuation, which is why these crosses are so important, especially if the crosses occur when the market's relatively flat. If crosses are occurring when there's insane volatility, they're certainly less impactful because they're just too slow. But this cross sort of happened at the speed of price, and you found support on the 200, and off to the races it was. So it hit this recent local high. It's now in a VPVR zone at the yearly pivot. So if this can consolidate up here, certainly to expect 100 to cleanly break sooner rather than later. Otherwise, it's going to retest 72, 65, something down here with the 200 and the other yearly pivot. It's kind of just a wait and see sort of situation. I don't see it breaking 50 anytime soon. I mean, there's tons of volume support here, and the trend would have to be pretty bearish to drift through 50, I think. There was a bit of a bearish divergence here that certainly slowed the progress. Anytime you see a bearish divergence on a yearly pivot, you should certainly have some caution for continuation there. And nothing too exciting on long shorts for Bitfinex there. Cloud loves it. Cloud has loved it since May, just like the Golden Cross. You can see that's Kumo breakout, and it was just, that's it. That's the trend. Another reason why these are so important to watch, just like Golden Crosses, Death Crosses, that sort of thing. So right now it's painting support at around 80. That's where the Kijun is. That would be the rebuy opportunity. Just like the resell opportunities were here. Anytime it taps that Kijun, it's going to try to bounce if the trend is real. So you'd expect a trend continuation move off of this. Then lastly, if we look at XMR BTC, this is the 2-day chart. And I zoomed out because the daily chart was a bit noisy. And this kind of like stellar shows just how clean this trend has been on the 2-day or the past 2 years, really. So it's below the 200 period EMA, which is actually the 400-day EMA, but it's above the 2-day cloud. So I like where this trend is sitting from a potentially bullish perspective. Definitely want to see it above this 200, want to see it above this pivot. Realistically, you want to see it above 01 to have any long-term shot at anything higher, because there's a ton of volume here at 01. Obviously psychological resistance as well, but it's not pushing lows. This head and shoulders thing got canceled out and it's reversed now to neutral bullish territory. So on-chain metrics look good, largely fueled by what is likely ransomware, crypto mining botnets, that sort of thing. And the USD pair and BTC pairs both look relatively bullish compared to where they have been over the past 2 years.